Sophisticated investors look beyond conventional investment options. Alternate Investment Fund (AIF) caters to the need of sophisticated investor. AIF funds pool money from high net worth individuals and invest in startups, infrastructure companies, SMEs, or any business which has high growth potential. It is a perfect blend of mutual fund and PMS. This video analyzes one such alternate investment from Sundaram Alternates called ECCO. Welcome to holisticinvestment.in. Sundaram Alternates Emerging Corporate Credit Opportunities Fund Series 1 ECCO-1. It comes under Category 2 Alternate Investment Fund. Before getting into the detailed analysis, first let us look what is Category 2 AIF. AIF that do not fall in Category 1 and Category 3 and which do not undertake leverage or borrowing other than to meet day-to-day operational requirements comes under Category 2 AIF. AIF that invest in a business unlisted or private space either in debt or equity come under this category. Various types of funds such as real estate funds, credit opportunities fund, private equity funds, funds for distressed asset, etc. are registered as Category 2 AIF. ECCO-1 comes under the Credit Opportunities Fund, which is utilized in the form of debt financing to support the business cash flow of mid-sized companies. The primary investment objective of the Emerging Corporate Credit Opportunities Fund Series 1 is to invest primarily in MSME, SME, fintech, manufacturing and service company, non-real estate sector. First, let us look into the basic details of ECCO-1. It is a close-ended Category 2 AIF which was launched in May 2022. The tenure is 6 years and it is extendable by 2 years with the approval of supermajority of investors by value. First drawdown is 25% of capital commitment, subsequent drawdowns on an as-needed basis within 12 months of closing. Quarterly NAV frequency and quarterly income distribution from the fund will commence beginning March 2023 when the fund invests in deals. So far, 53 crores capital called in from investors. Out of 53 crores, 2 deals are finalized and funds worth rupees 33 crores have been deployed. 5 more deals worth rupees 280 crores are in pipeline. All these metrics are as of Jan 2023. Next, we shall look at the fees structure. Setup fee up to 2% and administrative expense up to 0.5% per annum. The basic fee structure has 2 components. The first one is management fee, which is based on the investment amount. They have divided the investors into 4 categories based on the amount invested. The higher the amount, the lower the fees. For 1 crore investment, the management fee is 2% and for 25 crores, it is 1%. The next one is the performance fee, which is based on the alpha generation. If they were able to meet the hurdle rate, then a performance fee is charged. Hurdle rate pre-tax IRR is 12%. If they meet this rate, they charge 20% performance fee. Next, we shall look into the important aspect, which is the performance review of Sundaram Alternates. Sundaram Alternates offers both portfolio management service and alternate investment fund. Under Category 2 AIF, ECCO-1 is open for subscription and in Category 3, Atlas 1 and Atlas 2 is open for subscription. The table here will give you a glimpse of funds managed by Sundaram Alternates under AIF. There is only one fund that has matured and closed. You could see the actual return, that is the exit return of RE Credit Fund 1 as 19.34%. ECCO-1, Atlas 1 and Atlas 2 are still open for subscription and are ongoing schemes. All other funds other than these 3 funds are closed for subscription and are ongoing projects, that is, they are yet to mature. So, there is no data available to analyze the cash flow and the potential return we might get by investing in the funds offered by Sundaram Alternates. There is no proven track record. Next, we shall look at the inference and analysis of ECCO-1. Inference from the above details. The minimum ticket size is rupees 1 crore and thereafter 5 crore, 10 crore and 25 crore is the maximum limit. This close-ended scheme is still open for subscription. The tenure is 6 years. The capital repayment starts after 4 years. Meanwhile, you will be receiving returns every quarter from April 2023. To whom it is suitable? It is suitable for those who are well off, those who have built corpus through various asset class and invested in a wide spread of investment avenues, namely direct equity, PMS, mutual funds, gold related investment, real estate, etc. Those who have an aggressive risk profile, those who want to diversify beyond traditional investment. Next, limited or zero overlapping of ECCO-1 with other investments. There is zero overlapping of underlying securities between the stock market and ECCO-1. In direct equity, there is a list of companies that are grouped as large cap, mid cap, small cap stocks. Whereas under AIF, most of the investments are made in startups and medium and small scale enterprises. So, ECCO-1 investment do not overlap with any of your other investments. Less volatility of ECCO-1. Short-term volatility generally upset investors. Under ECCO-1, though the investment risk is high, it is not as volatile as the stock market. Also, AIF is not affected due to the ripple effect of other stock market movements. Growth avenue of ECCO-1. ECCO-1 focuses on MSME and SME companies which require capex. Most of the businesses are in the southern part of India and with few in Maharashtra and Gujarat. To mitigate risk, they restrict credit ranging from BB to A. They look for sustainable growth during the lending period and also study the revenue history. The pipeline deals indicate a diversified investment covering textile, pharma, financial institution, hospitality and healthcare. They plan to provide capital for a tenure of 5+ years and their target IRR is 17 to 18%. Risk involved. This new age investment shouldn't be chosen based on the returns alone. The consistency of the return and the risk involved also to be evaluated. The risk is on the higher side as we do not have much data on the past performance to analyze the overall performance of these types of investments. We have come to the end of the analysis. Our final verdict on ECCO-1. ECCO-1 is ideal for very high net worth individuals as the minimum ticket size ranges in crores. Those who are having a strong asset base through a wide range of asset classes can consider this for diversification. Even very high net worth individuals should consider only if it's add value to their portfolio. Also, do not plunge into funds without analyzing your risk appetite as there is a risk to principal investment too. ECCO-1 offers quarterly income, but bear in mind that any income other than business income generated by the fund will be taxed at the hand of investor and not by the fund house. Since it is an illiquid investment, it can be part of your satellite portfolio and not a part of your core portfolio. It is necessary to deep dive in and understand this close-ended scheme before making any investment decision. You must consult with a professional financial advisor before making any huge investment decision as your investment portfolio needs to be stable. A detailed review about Sundaram ECCO-1 is available in our website and the link is given in the description. Hope you like this video. If you have any questions related to this or any other investment option or related to your financial goal, don't hesitate to book a free appointment with our financial planners. The link to the free booking is given in the description box below. Also, will you be interested to attend any insightful investment webinar? Then feel free to register for the upcoming enlightening investment webinar. It is completely free. The registration link for the upcoming webinar is also given in the description box. If you like this video, please give us thumbs up. Also, share it with your social circle. If you haven't subscribed our YouTube channel so far, please subscribe now.